All right, back for the close. Looks like I wasn't here today, and I didn't have but maybe 8 or 9 alert scan this week, but we were able to. We didn't miss anything. All the alerts that came in. Usually, you go by memory once you've been doing this as long as I've been doing it, but um, when you get these type of weeks, this is where you just sit back, you relax, you let all the you let all the folks sit there and make their predictions. Um, we don't predict anything; we anticipate. And that's what you got to get used to is anticipating price movement. Um, the probabilities will always work in your favor if you're not trying to swing for the fences. Let's take a look here. A lot of people who seem to be concentrating on UPS and forums and everything. Um, I read stuff, I listen to stuff, but it doesn't affect how we trade. Um, it's good to be sitting on your hands when you have market conditions like this. Um, you should be doing some DCAing if you understand how the system is set up and how you're supposed to structure your trades. Just going down through some of them. Really, if you're trading one option, you're not getting enough movement. If you're doing anywhere from 50 to 100 options, uh, yeah, you can make some money off these small trades, but you're going to get ate up, in the short term. On when you have markets like this, you're going to be in and out. You'll be losing money not only on your commissions but on your losses. So it's a hard road to go. So know this: if you're an options trader and you're trading one contract at a time, um, you're how can I say this? Your percentage wins and the size of your trades go down dramatically over time. It's a no win situation. So leveraging money, no, we don't want to do that. And picking direction, no, we don't want to do that. So there is a place for options, but I don't cover that in this because that's getting a little too technical for people to get that are new. There's a lot of people out there that are promoting options, and there's nothing wrong with options if they're used in the correct way. Get used to it, the learning curve, and then you're going to find the amount of money. Hey, education costs money, right? So at least you're trading it, and maybe you can look at it that way and say, yeah, well, okay, I lost $10,000, but now you're $10,000 behind. So why start there? Why not take it the easy way and earn money and then dabble? But everybody wants that, get rich quick. It's not going to happen. You might get lucky on a trade here and there, but if you notice, we're all about collecting dividends, right? That's first and foremost. So that's where your strategy starts. You don't have to use the stocks I'm using. You can pick all your own dividend paying stocks. I've just got a small amount. If you look at the overall amount of dividend paying stocks that are out there, so go down through your lists, make a list, have a plan, and this is all about money management. Stop listening to these people that are trying to push you into all these different uh, vehicles to lose your money. It's like, look at it this way. How to let money make money for you. You're trying to force it. And they have, if you walk into a casino, what you'll see is you got several different tables. See, there's no winning system, there's no winning table in a casino. It's all there to take your money, right? There is a way to take money out of the market, but it takes trading and investing consistently over time, right? And they can't ever take that away from you. Hey, I'd love to see a market crash here and we can just make more money. We're at all-time highs now. We're not making as high a percentage, but we're still hitting our goals. That's what it's all about. We can make more when the market is in a down because we can buy more. It's just simple numbers. It's a simple numbers game. Don't be fooled by all this get rich quick stuff. So if you know you're going to lose, if you know you have, if the house in a casino has an edge, going to a casino, you should know going in that you're probably going to lose your money. So if you know that the house has an edge in options, and depending on your strategy, okay, if you know that the house has an edge going in and that you're going to be paying for that, that is so confusing for the layperson that comes in that if you spend enough time, yeah, you can come up with well, I made a 5% gain in options over the long term. If you have a small account and you're only trading one option, you'll never hit that 5% if that's your goal. But if you have a large amount of money and you're trading options, you're not going to be trading just one contract. You're looking for smaller moves. So it works the same way with stocks. You're trying to take money out as quick as you can, not how can I put this? You're trying to take money out as quickly as you can, but it's based on occurrences and not a linear time value. That it's very hard to explain. You have to see it and experience it for yourself. And once you actually see it start to happen, you'll see the snowball effect. So each account that you see operating here, it's making money the whole time you're sitting there looking at it. I know it's boring as hell to look at these because it's not flashy and you don't hear everything going off. Well, you hear alerts and stuff going off. You'll see trades here and there. But we're in a dead zone right now. Market's not doing anything. We're looking at you got a couple lottery tickets in here. Example, let's look at our lottery tickets that we got out there. Where's that at? Oh, HGTUX. Now, I'm not promoting this stock. I'm not telling anybody to buy it. You'll never hear me or uh, write down in Twitter or Facebook or anything else, hey, buy this. That's not what we're about. You make the decision on what you want to buy. All right. But what I'll show you is how to manage that money with a small account. I'm telling you, if you can't manage $10,000, you can forget about $100,000. You'll burn it up in a heartbeat. But give yourself this: try for 30 days. Okay. Buy something. Um, Pick something. It's a dividend-paying stock. Try to look for something at least at 8% yield, and look at a CEF. All right, doesn't matter which one it is, but you pick. Remember, this is a long-term thing. Expect to hold that for a minimum of 10 years. Just say, hey, I'm willing to put $100 into this one CEF for 10 years. And CEFs normally pay on a month-to-month basis. So if you can make 8%, $100, right? Use round numbers to get your understanding. Forget this 100 share shit. People are over leveraging themselves. You see it every day. These small accounts that I'm showing you here, this is for, which one we got up here on the screen? So has it got 74,000 in it? And look at most of these. You've got 172 here, 163. It'll tell you the percentage in the portfolio, 0.758%, right? Not even 1% of the account is in that, but it's earning you $1.56 per share per year. You got 35 of those. Now you multiply this by the number of stocks in your portfolio, right? You're spreading your risk out. Remember, you're long-term, right? You're a long-term investor. You're not getting distracted by, hey, I'm going to, I need to be making money every single day. You will if you're bringing in dividends. That's the number one thing that you're trying to do. Bringing in money. You're trying to make that money work. So it goes into your cash account. So you'll have, what do we have in cash in this particular one? We got 27,000 sitting in there in an account that's worth 70. So let's look. Our average cost, let's go to something we can see. So our average cost, you can see that green line. Let me put this up on, stop the little screen switcher here. And out of that, close. All right. So there's your average cost, is this green line right here, right? 53.12. Excuse me. Anything below that we can buy. Now, one of the rules is scans always take precedence, right? So if we look here, I'm using a 50% pullback, and there's several different strategies out there. You can use a limit strategy with my system, anything that you want to do. If you want to set up your own thing, but the whole idea is know where you're buying your next purchase, right? So even though we're above that 50%, if the scan, if this particular one, TSE, I don't even know what it is. I think that's a Mexican something, Trinseo PLC. I don't even know what it is. Don't care. It pays dividends, right? It's in business to make money. It's making money. It's paying dividends. It's not paying dividends. I don't want anything to do with it. Okay? Such as Netflix. A lot of people getting burned on Netflix. Where was I at? Okay, so you come up on scan again, right? And you're above this point. If it comes up on the scan, we're using a pullback. Yes, we're back in. We're going to buy. Let's just say it came back up on the scan. We hit our target. We put in our trailing buy, and we're in. Right. In this case, we're sitting at 21 shares max. What do we got so far? We only have 4. So if it stayed at that level, then we continue to make money. Hold on. Hey! Somebody's here. Hold on a second. Let the dog bark outside. So the whole idea going forward is the scan is your friend. Okay. Next would be, hitting these targets. If you're saying, hey, I'm doing a 50% pullback, I don't use Fibonacci. I just use that tool just to get to that point. It's structured. That's all it is. 50% pullback. So next we're looking at stocks that you've had a while. This one's probably been in this portfolio quite a while. You can see it's got 196 shares. Looks like 212 is the max shares. We have algorithms that come up with these numbers. If you want to send me something that say, hey, what's the max shares on this? Don't send me something that's that doesn't have dividends. It won't work in our programming. All right. But this thing is consistently paid. I know ARR has been around for a long, long time, but it's on an Armor Residential REIT. So it's a real estate investment trust. So as you can see, it pays monthly, right? We want to make money consistently every month. Now, the lottery ticket that you were just looking at, HGTU, if you've been following me any amount of time, I told somebody back in here that, I think this one looks like we have a cost on it, $8.96. We got 348 shares. I don't know the max shares on this. I'd have to look it up. Like I say, it drops off because of the dividends not being there. It's not paying dividends. We don't sell it because we're never going to take a loss on it unless it just goes away. Then we take our loss. But in this case, it's coming back. So we only have 2 of those in this particular account. Was it CHKR? Yeah, CHKR is another one that's been there a while. 595 shares, but you can go to 909 shares. So there's a lot that goes into these equations, but this one is still paying dividends. It's just, for some reason, it's not showing on here. I think there's another one up here. Okay, and this is a warrant similar to an option, but this one doesn't mature until August 3rd of 27. So we're not doing anything with it. We're just going to let it sit. It's a lottery ticket. I think at one point Oxy had some corporate earnings that related, or they gave out warrants to existing shareholders. So that's how we came up with that one. We don't actually buy warrants. It doesn't pay dividends. It's just sitting there. It's a single warrant. It's not worth a lot of money. We'll let it go. But oil skyrockets for whatever reason, we'll just sit there and hold it. What's another good example? Okay, let's go try to hit all the CEFs that are in here. Basically, when you get days or weeks like this, you can see that there's a lot of, I wouldn't call it a tug of war. I'd say it's manipulation more than anything, back and forth. They're trying to get people to buy. A lot of market maker activity going on. We see a lot of, when you see a lot of back and forth like this is retail traders are paying the price right now. The pros are not around. You can tell. Let's see, DX. Yeah, okay. So DX here, it's a monthly pair, 13 cents a month per share. It looks like that's a total of $1.56 per year per share. So you have to think of each dividend payment as an occurrence. The more occurrences you have, the more money you're going to make. Now you could simply just take let's get a calculator up here, or let's find one that's not. Okay, so here's a quarterly pair, right? So you can just go, this is better than a semi. We try to stay away from the semi-annual pairs. They'll show up on the scans every once in a while, but like a annual pair, I'm just not interested, you know. Like maybe if it was the next week or something, maybe we'd hit it, but more times than not, what are your chances, you know, 1 in 12 to be close to you? So we're not worried about those. Pay attention to, like if you had $10,000 for 1 month, yeah, you could say, yeah, well, that's easy. I can just buy one stock and put all my money in there and do that for 1 month. And guess what? You won't lose any money, right? You make the distinction between realized and unrealized gains. So if your money is in there for a month, yeah, it could lose value, right? But you would still make that dividend. So knowing the rules of 72, know how long it takes you to double your money. This is the thing I see every time. Let's go to Netflix here, just because it's fresh on my mind. I put this up here because, yeah, I follow Kramer, but I don't listen to a thing. He's entertainment. He hasn't got a clue. I don't know how he made his money. I don't care. I think everything that's talked about online or on local television networks or cable, whatever, I don't trust any of it. I don't listen to any news. I don't care. You know, I read what I want to read, but I take it with a grain of salt. It's more entertainment than anything. A lot of it's there meant to sway you one way or another. So be careful what you listen to until you get, you know, to a point where you don't trust anything. My recommendation is don't listen to anybody out there. Don't even listen to me. Watch and learn and say, hey, is this person for real? Are they making money? Well, I can tell you right now, yeah, I don't follow Kramer. I haven't followed him but maybe a year. I remember him from years and years ago when I saw him on Twitter, and I haven't been on Twitter that long myself, but when I first saw him on Twitter, I was like, well, let's see what this joker's up to now, because I remember, I guess when he had the show called Mad Money, it's like, yeah, whatever. But let's see here. Okay, so what's this? If everybody knows that Netflix doesn't pay nothing. So if you listen to Kramer, you got in up here, and you know what do most people do? Say, okay, I'm going to buy one share, right? Let's just keep it simple. Let's say 10. So you put $6,000 in, and you put a dollar stop in, or $100 stop in. So 500 is your limit, right? So you lose $100 if it came down. Well, how many people use that strategy? Right? And well, look at that. It came all the way down here. I'm going to buy here, right? Now it comes down to 300. You just keep on doing this all the way down. You leapfrogging all the way down. So you've already taken 1, 2, 3 losses. So you lost $300 of that initial 600. Well, what's that percentage? 300 divided by 6,000. Multiply that by 100. Oh, it's 5%. Now you lost 5% of your money in 4 months. That's pretty bad for a $6,000 investment to lose $300 that fast, right? Well, we never invested in it, right? So therefore, we never lost, right? And the main reason is because we don't screw around with growth stocks. We don't care. We're not looking like, okay, let's just say somebody wanted to get in here at 188.82. It's floating around down here at the bottom. You say, I'm going to buy 10 shares, so 1,800 bucks. Let's just make it 1890, right? What do you expect to try to make on this? If you're wrong, what are you going to do? You're going to put your stop down 100 bucks, right? Or whatever. I mean, we're just using round numbers here. So what are you looking to make out of this? What do most people think? I think it's going to come back up here. I think it's going to come back up to 675. It's like, why would you think that? Well, it just looks like it because the chart, the price was up there. You ever heard the term price has memory? That's possible, right? That's possible it could come back up here. What's the probabilities? No idea. Well, what's the probabilities of it hitting $200? It's probably pretty good, right? What's the possibility or probabilities of it hitting 175? It's about the same as hitting 200. You're kind of right in the middle of those, right? So we're talking about probabilities here. You have to get your thinking right, because if you keep doing this where you're looking at these stupid charts, I don't need to use these charts. It's just everybody's so used to them. When I'm trying to teach people how to do this, I'm trying to get your head out of this. This is some type of prediction machine. When you open this up, these are weekly charts, by the way, not daily, if you haven't figured that out already. But if you're looking at this and you're saying, I know it's going back up, that's where you're making your first mistake. Second mistake is the size and how much money you're putting in there. The third mistake is you're buying something that doesn't pay you if you're wrong, right? So like if you really believed that Netflix is a good company and you say, I'm just going to buy it and I'm going to sit on it. Well, when are you going to sell it? It's like I keep hearing this hoodling crap. Like, you're going to hoodle for how long? When are you going to do it? When you double your money? When it goes to 380? That'd be right here, right? What's your target price? Like, how long are you going to wait? What if it never comes back up? What if this thing drops down to, if you're putting in a $100 stop, well, if you don't use a stop and you hoodle, maybe this goes down to 50 bucks. Now you're down $1,300. So this is the problem that people have. See, at least when you're coming down, I know this market can come down. I know it can go back up, but I'm not predicting direction. What I'm doing is predicting cash flow. I know that if I can hit 1% per month per account, and I don't even have all the money working, right? You look here, you got 27,182 in this one particular account. We look at the others, they have a little bit lower amounts, but they're smaller accounts. So as this transitions in, as we're coming down, what's happening to the amount of dividends? It's going up. So if you have monthly paying dividends coming in, what's happening? It's rolling. That money is rolling. It's making itself stronger over time. So more than likely, we will continue to see a deterioration in the overall market. But anything can happen, right? This thing can jump right back up. And what are we doing? We're selling on the way up, right? Now, if you haven't figured it out already, what we do is we target the dividend amount. If it's $1.63 per year, so if SLRC, we say, okay, here's our average, right? Green area right here. So our average is $1.63 plus some change, because we do pay a commission, $1 per side. We just factor that into our trade, so we don't actually lose that dollar. So as you can see, it's a simple formula, right? If you had, this is where people get into trouble. They're like, well, I'm not making money fast enough. I need to buy more shares. And then they try to target that. I said, no, that's not the way it works. As all you're doing is you think you know where it's going. I have no idea if this is going to go back up here. Okay. But I'm pretty confident that how many days has it been? 688 days without a loss. I'm I'm pretty confident that eventually that price will come back at some point. Okay. Maybe it doesn't. But how many of these stocks in this portfolio are going to continue, to go down, and I keep collecting more dividends because I'm buying more at specific spots. Okay. This isn't just like, well, I think it looks like a good time to buy because, oh, this candle, like this big candle here, this big red candle, I'm going to buy off of this. It's like, you don't know, but you're looking at this and you're saying, well, look what it did here. You're assuming that that's going to happen again, right? Don't fall into this trap. Candles mean nothing. All it tells you, it gives you information as far as this. You look at that little box that's on the screen. Here's the high, here's the low, here's the open, here's the close. If you want to get into all this other crap and say, oh, well, here's the low price was 1751. What does that mean? Did you have a buy point there? Were you going to buy at that level? It means nothing. You have to have some kind of strategy behind your money management. Don't fall into the trap. There's so many videos over it. I'm going to go over more of some of these videos and I'll debunk all their stuff. I mean, anybody can have 2020, looking backwards and say, well, see what happened here? If I just buy when I see this and this goes back up, it's like, okay, it's a 50-50. Every single trade you make is a 50-50 trade. If it goes up and hits your target, hey, you got it. I'm telling you, don't fall for these charts. None of them. The charts don't matter. You can put a moving average on there. You can put a high and a low on the chart and do all this. Say, well, I'm going to buy when it comes down to this line that I just arbitrarily put on here and put this one up here. It's like, okay, go for it. See if it works. See if you can do it consistently. I'm showing you how you can do it consistently. You got 688 days of proof. I can prove what I'm doing. There's not a lot of people out there that can do that. And if you have any questions about it, just ask your favorite trader to produce a monthly brokerage statement that's verifiable. I do it. Every day I show everybody what I'm doing. Now, I'm only showing you 3 of 15 different portfolios, but I can't show some of the people's portfolios that I manage. But, oh shit, we're already out. That's how exciting a day it was. We didn't even have any movement going into the close. It looked like we dropped a few. What happened here? Yeah, still mulling around. None of this stuff that Interactive Brokers has up here on this daily lineup, I pay no attention to it. I might read something, just if there's something weird going on in the market. I don't really care what the price of oil is. I don't care. I just don't care about anything that they talk about because it's all prejudiced. It's all biased. If there's facts to it, what does it matter if I know that the company that I'm buying, they pay me dividends? That's what it's about. Looking at this, you can see that we had a down day. So, and this is what I try to get across to some of the folks that I teach on this. Don't be so concerned about the day-to-day activities that are in the market. You're going to have some like whomping great days in the market where there's just, you can't do anything wrong, It's just money coming in, you're selling, your setups are perfect. Then you have the days where, look, this week, what have we got going on? Okay, so today, well, the last 3 days, 0 on trades. Right? You look at that and you're like, okay, 0, 0, 0. Let's see how many zeros we got. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10, 10 total 0 spots. So 1, 2, 3, 6 days of 0 profit. All right, that's a weak month, right? But we still haven't taken a loss, and we're within 380 bucks of our target. Do we hit it? What's our? If we look over on the top of the screen where it's scrolling across, it looks like we have what 300 was it 378.23 in dividend accruals getting ready to pay. Now maybe some of those hit. We'll get some more tomorrow probably, and the next day. Maybe we don't. Maybe it just pays on the first, and then this could be 0, 0. We end up with 1,021, and our starting total for the year, let's just say, divided by 140, right, and multiply that by 7, or I'm sorry, by 100. So you got 0.729%. So we're about 1/4% away from our target for the month. But we still made $1,000 and we still hadn't lost any money. We still have cash to go back in the market, 27,182. This is what, if you go to like somebody like Stock Gurus, look at what those people are doing over there. Okay? The Warren Buffetts of the world. I don't know any of these people. I've been doing this 30 years. I've never met any of these guys. Look at what they're doing. They're buying and they're holding. They're collecting dividends. I like to use Buffett. It's simple. Everybody knows what a Coca-Cola is. He has 400 million shares. He gets paid 150 million a quarter. He's just sitting because he can't be in and out. We can be in and out with smaller accounts. You have to understand the money first. This whole thing about getting rich quick, you're gambling. There's a way to use the options, and for the people that have been doing this long enough, once you start making money, if you want to take a little bit of risk, there's risk involved in everything that you do, right? But this is the least risky. I prove that just by my track record. When you start buying, when you want to sell a put to get into the market, you have to be very careful. You have to understand what you're getting yourself into and what you're actually doing. At this point right now, I haven't, let's see, when's the last time I did a options trade? It's been 7 months. But yeah, well, let's see. I think it was October of last year, so it's November, December, January. Yeah, almost 7 months. Okay, not on any of these accounts that I'm showing here. These are for educational purposes, but they are live accounts. I'm trying to show you how not to lose money in the market. Too many people get in, oh my God, I lost all my money in the market. I'm like, how the fuck are you losing money in these markets? I mean, all you got to do is this simple idea. If you want, look, find a CEF, buy 10 shares or whatever, $100 worth, $500 worth, and sit on it for a month. As soon as you make that money, it comes into your account, guess what? You're a winner. You want to do it on date? You can do it on date. Say, hey, there's a CEF paying tomorrow. Buy it the day before, but don't buy it with everything in your account. Don't, like, if all your money is tied up in one thing, it can go down on you. Now all you're going to do is make that dividend payment. And there's nothing wrong with that. But you can't sell it. You have to have it in your head that it's long term. If you don't have that mindset, and it's not money you're willing to lose, it's money you want to keep. It's just you're never going to make money any other way than in the stock market. There's nowhere to do it right now. You want to buy real estate? How much is a house going to cost you? How much is the taxes? There's lots of different ways to have income coming in, but you're always going to end up losing money in some way if you haven't been doing it long enough. Learn this system and you don't have to worry about it. You know, if the stock market's going away tomorrow, then guess what? Everybody's losing. But if you have that fear and you believe that the world's ending tomorrow, then, you know, I don't know what to tell you. But there's too many people with, you know, I'm negative against people that believe that they can take advantage of other people. I'm trying to help folks here. And that's why I get on and make stupid comments to people like Jim Cramer, because I don't like him. You know, I don't know the guy, don't like him, but I see what he does, and he promotes a lot of stupid shit. He's paid to be an entertainer. He's not paid to make you money. If it costs something, everything has a cost in life, and he's not, you know, he's charging somebody, I guess. I don't know, he's got some type of investment club that people complain about all the time, but yet he promotes it like he's making all kinds of money. Maybe he is, I don't know. I don't care if he is or not. And that's another thing. Stop worrying about what other people are making. Somebody else is always going to be making more than you. Learn how to protect your money, how to grow your money in a system that's set up for an investor. Hey, back 30 years ago, I can remember paying what was it, $52 for one trade. Trades are free now. You've got the advantage. You, as a retail investor with small amounts of money, I'm talking below $1 million, you have a distinct advantage over all of these gurus out there with billions. All these hedge funds, they have trouble getting money in and out. They're not as flexible as we are. We can be in and out very quickly based on just taking a little bit out. And they can't affect you because they can't see stops. I use no stops. There's no stops. Everybody I train, I'm telling you, if you use stops, you're going to lose money. That's how it works. You have to be willing to understand that what you have invested in each company is its own individual risk, right? So if you've got $100 in one, you got 350 in another, that's your risk per company. Okay, instead of putting all your eggs in that one basket. Look, somebody that says, oh yeah, I'm telling you, there's a bunch of people out there put all their money into Netflix. When did they sell? Institutions been selling. Those people are sitting there, well, I'm gonna wait until it doubles in value, or I'm gonna buy Tesla and wait for it to double in value. Like, well, if you got that kind of time and you know you think that it's gonna go to $2,000 a share, then have at it. But anyways, I'm long-winded today. Anyway, I'll be back in the morning and we'll see what happens. I just wanted to check a couple of these things just after hours. The reason why I went over a little bit is because we're in earnings and I'm just waiting to see. I can't remember. There's something like 15 or 16 in these three accounts that had a possibility of moving. What was that one? Yeah, UPS is just still floating around there. Check this last one here. I think it was CB. Yeah, CB had good earnings. Didn't go as high. TE connectivity. Let's see. But, you know, nothing happened after the bell. Give it about 10-15 minutes to see if anything else happened. Sometimes the earnings after the close happen. And then, you know, you've got that moment there where you can say, okay, yeah, I'm going to sell it after hours, but sell it at that predicted price, because everything that's on here, these sell limits that you see, they're not going to be active in after hours. They're going to be active during regular trading hours. So you'd have to manually change that order, discontinue that order. And remember, if you're running like a regular cash account, you don't have to worry about it too much if you've got margin. But if you have a retirement account or something like that, you know, it's not going to allow you to have double orders. And what that means is you'd end up having a short position. So you can run into that. Remember, you'd have to close one position and then reinitiate another sell order in an aftermarket or after hours trading situation. But just a little tip there for somebody that's new to this, all you pros out there that been doing it a while, you don't need to, you should know that. But yeah, just a pretty boring week. And I'll end on this. Don't be sitting in front of your computer all day. You know, make your trades. Say, okay, this is what I'm going to do. I don't sit in front of the computer all day. I say, when I'm done with all 15 accounts, I'm done. I'm out. I'm doing something. Okay. And some of them I don't even check until like late tonight. You know, I just don't. I don't spend too much time worrying about it, because if you get a big move, you're going to know it because you have alerts. Set your alerts, know where they're at, and then, you know, you have a strategy. You go forward, you pull money out of the market. Remember, if you've got a small amount of money, don't expect to make big amounts of money. That's called gambling. If you take out a little bit out of the market each time, it just takes time. And you can turn, you know, 10,000 into 20,000 in 5 or 6 years without adding any money to your account. The market will do it for you. Just follow this system and you'll get there. Anyways, that's it for now. Later on.